So, good evening and welcome to today's class. The unit is, there are those that are doing ATD, we call it the Introduction to Financial Accounting. Those that are doing CPA, Financial Accounting and ATD. And then we call it for those doing CS, Principles of Accounting and what? Taxation. Sawa. I'm the one who will be taking you through the unit. My name is Japheth. Sawa. So the first thing that I will do, I'll first highlight the topics that we'll be able to cover. And generally to start with, we'll be using 4 past papers. Sawa. The reason I will be using those past papers we'll be able to see as we go by. You will see that some of the questions that is in one paper are also tested on this other paper. Because generally Kasnebu wanajua nyinyi hampendi kutumia past papers zingine. You only concentrate on one, you base on that, and then most of the cases they repeat the question. So we'll just be able to see. So the topics that we'll be able to cover in this unit, number 1, we'll begin from what we call the introduction to accounting. The introduction to accounting. Now, on introduction to accounting, we'll be able to understand what we mean when we talk about the accounting. So, now when we talk about accounting generally, is the art of recording, classifying, summarizing, and analyzing financial transactions and thereof interpreting them. So what do I mean in this case? We'll be recording financial transactions. And the concept under which we'll be able to know how we record financial transaction is what we call the double entry system, which is generally out of one of the accounting concepts that we'll be able to talk about, the duality concept. Now, duality concept tells us that once you debit a given transactions, you have to credit another what? Transactions. Simply what we mean is that every transaction must have 2 effects on the account. Debit ya kwanza, you have to credit another what? Transaction. When I say debit here, because it's one of the terms I will be using most, is that is an inflow. So you debit. When is an outflow, you credit. Kwa pamoja. Kama ni asset umenunua, hiyo si ni yako, is a debit. Sawa. Kama ni liability umeborrow loan, that is a liability, you credit. Sawa. So in each and every transaction that you do, it must have 2 effects on the account. What I mean is there is that account that you have to debit, and there is the other account that you have to do what? To credit. Now, accounting also will be classifying. Now, classifying will be able to see it in the cases of assets and liabilities. Like assets, we classify them into 2. There will be what we call the non-current assets and also the current what? Current assets. Liabilities, non-current liability and also what? Current liabilities. Generally is an art of classifying. We'll also be able to summarize financial transactions. Now, when presenting financial statement, we do give a summary. Also, hatuwezi andika kila siku. We know the sales that a company can make in a day. Sawa. In a year, ukisema uandike kila moja, utashinda hapo miaka yote. But in our case, we just give a summary. Sales zenye za hiyo mwaka, hiyo. Expenses hiyo mwaka is just a summary. Sawa. We'll also be able to see how we interpret financial transaction. This is normally done through what we call the ratios. Ratios generally, they help us in doing what we call the what? Thought analysis. So those that have done management, SWOT analysis is a process, it generally involves analyzing financial statement to determine the strength, weaknesses, opportunities, as well as what? Threats. Sawa sawa. So ukitaka kujua the strength and weaknesses, opportunities, as well as threats of an organization, you do what we call analyzing, which we do it via what we call the ratios. Sawa sawa. So under the introduction to accounting, we'll be able to understand what we mean when we talk about accounting. We'll also be able to know who are the users of accounting information, and basically what is the information need. Kama tunasema ni the management. They use the accounting information. Why do they use that accounting information? And what is basically the information need? Wanataka kujua nini? Kwa pamoja. Then also we'll get to what we call the quantitative characteristics of a good accounting information. Characteristics of a good accounting information, basically, we are talking about the features of an accounting information. Sawa sawa. Where we'll be talking about 5 of them: the reliability, the relevance, the understandability, the comparability, the timeliness, etc. Sawa sawa. Then after that, we'll also be able to talk about what we call the professional ethics. Sawa sawa. We'll be able to know the ethical behavior as a profession. Maybe you are doing the CS, you are doing the CPA, you are doing the ATD as a profession. When we give you the job, will you be able to comply with the ethical requirements? Ethical requirements here, we're talking about what will guide you as a profession. We are talking about integrity. Are you honest and straightforward? We are talking about the objectivity. Objectivity, are you being influenced by others to override your professional judgment? We're talking about the confidentiality. Kama wewe ukikakaa kidogo una disclose information about the company. Wewe ndo you are the accountant, unaenda unaambia wengine this company is making these profits and so forth. You are going against the principle of confidentiality. We also talk about the professional competence and due care, where you are required to exercise your knowledge and skills in provision of professional services. Basically is what we are doing here. You are acquiring that knowledge, sawa sawa, to go and apply it. And then also we'll talk about the professional behavior and so forth. We'll also be able to talk about the accounting concepts, or what we call the principles. Now, the accounting concept or principle, they act as a guide in preparations of financial statements. Sawa sawa. Hiyo ndo itakuwa inatuguide how we are supposed to prepare those financial statements. There are 13 of them. Tutaziongelelea hapa. Sawa sawa. And then also we'll be able to talk about the accounting standards. Accounting standards, generally, they are the methods and approaches that guide us in preparations of those financial statements. Basically, just to understand what are the advantages and what are the disadvantages of accounting standards. After that, we'll also be able to talk about the regulatory bodies. We are talking about the accounting profession. Basically, because here we'll be talking about accounting. Who regulates the accounting profession? It is regulated at both the local level and in the international level. The local level here is where we talk about the ISPAC. It's where we also talk about the CASNEB itself. We talk about the registration of accountants board, the RAB. They regulate the accounting profession. At the international level, or what we call the global level, is where we have the IFAC. When I talk of IFAC here, is the International Federation for Accountants. International Federation for Accountants here is the body that regulates the global accounting profession. Sawa sawa. But this one, it operates with subcommittees. Na kila committee iko na its own what? Mandate. Sawa sawa. There is a committee that is there to formulate the code of ethics. Tunaitanga ISBA. There is a committee that is there to formulate the accounting standards. Inaitwa the IASB. There is a committee that is there to formulate the International Public Sector Accounting standards. Those that we use in accounting for the government entities. Sawa. That is also another thing that we'll be able to talk about. Sawa. That is under the introduction to accounting. Then after that, because one of the things that you have to understand is that the accounting is a process. Kuna mali tunafaa kuanzia. Kwanza ni uelewe hiyo. Kwa ukikosa kuelewa hapa, tukiingia hapa huku kwingine utafloat yote. That is why I want you to be very keen tukianza. Because definitely ukikosa kuelewa this part of accounting, the others from there utakuwa unasikia ni kama na kuimbia wimbo. Sawa. Lakini usikumbali hiyo. Now, after that we'll also get to the recording of financial transactions. Recording of financial transaction. Recording of financial transaction is what we call the double what? The double entry systems or the double entry bookkeeping. Number 3, we'll also talk about the bank reconciliation statements. Reconciliation statement. Bank reconciliation statement. The bank reconciliation statement is where generally in an organization there is an accountant. Sawa. Accountant lazima maintain his own records. Kama ni bank transaction, yeye atakuwa na maintain the bank transactions. Ni sawa. Lakini sasa ukienda kwa bank they will give you the bank statements. Ni ukweli. So unaweza pata there is a difference between you as an accountant, what you've been able to prepare with regards to the bank and what you have on the bank statement. So you have to do what? Reconcile the two. We'll also talk about the control accounts. Number 4. Tunaita the control what? Accounts. Now, in a business can buy goods on credits. No kweli. A business can sell goods on credit to customers. No. So control account, you are controlling those credit sales and credit purchases. You want to know at the end of a particular period, ni pesa ngapi the customers you are waiting to receive from the customers, or how much are you expecting to pay the suppliers? Sawa. Those are what we call the control accounts. Then number 5, we'll also be able to talk about the financial statements of a sole trader. Sole trader is a business that is maintained or managed by a single individual. Sawa. So in the financial statement of a sole trader, mtu mmoja, kwa pamoja. Generally, a sole proprietor is required to maintain 2 types of financial statement. The statement of profit or loss, ndo ajue profits. Sawa. And then the statement of financial position. The statement of financial position will help him to know the position of the business. Yani inamwambia kama the business is going what? Going concern. Nikisema going concern namaanisha whether that business will continue in operational existence for a foreseeable what? Foreseeable future. Sawa. Yani it exists forever. That is what we'll be able to talk about in that topic. Number 6, we'll also be able to talk about the financial statements of partnerships. Financial statements of partnership. When we talk of partnership is where 2 or more people come together and do business as one with a name of making profits. Sawa. So in this case, you'll be able to know what are the accounts that are maintained in partnerships. And then again, also we'll get further to what we call the changes in partnerships. Sawa. Changes in partnership is where, for example, you may find that the partners have admitted another partner. Yani kuna partner mwingine wameongezea, walikuwa wawili, wameongezea mmoja wakakuwa watatu. That is a change in partnership. You'll also realize the other one we call the retirement of a partner, where probably they were existing as 3 partners, mmoja akaretire. That is a change. Or there is any other change in partnership agreement. Now, partners here, we say they are bonded together through what we call a partnership deed, or what we call the partnership agreement. Hii ndio inakuambia how they are operating. Sawa. So if there is any other change in the partnership deed or agreement, like the change in profit or loss sharing ratio, or the changes in interest on capital on drawings or that, then that will be a change in partnership. And this is what we say in our case. Whenever there is any change in partnership, the goodwill of that partnership should be valued. What do I mean when I talk about a goodwill? Now, goodwill, we talk of it as a future economic benefit that cannot be physically identified or separately recognized, but it flows to an entity. That is why when you want to open a shop here in Nairobi, unasikianga goodwill. Lakini wewe ukiuliza hiyo goodwill iko wapi huwezi iona. Kwa pamoja. Generally wanakuambianga you are opening this place a business because the place is still known. Yani hiyo ni kukuambia inajulikana, so nilipe hivyo. And that is why if you look at those buildings that have floors, mwenye ako ground floor hata live the same goodwill na mwenye ako 5th floor ama tukipanda hivyo. Kwa huyo ako ground floor anaonekana na watu sana compared to mwenye ako uko juu. Those are the things that we'll be talking about in this case. When I talk of goodwill in partnership, hivi ndo tunamaanisha before you joined us as partners, sisi tulikuwa tumeoperate hiyo partnership na ilikuwa inajulikana na tulikuwa tuna make profit. Sawa. And that is why we have to value that goodwill as at that moment. Sawa. And then when we value that goodwill, tunasemanga, you're not supposed to maintain that goodwill to retain it. You have to write it off immediately. Sawa. You write it off to immediately to partners who existed before the change. Wenye walikuwa hapo ndo wanafaa kubenefit na hiyo goodwill. That is what we'll be talking about here. Sawa. Then number 7, we'll also talk about the financial statement of a company. Financial statement. This is of a company. Now, financial statements of a company here. A company is a voluntary association of individuals who come together with the name of making profit. Sawa. Here we'll have 2 types of companies. You know, there is a private companies and a public companies. You know the difference between the private companies and public companies? Amjui. Now, when I talk of a public company, is a listed company. Yani listed company, I mean the company is listed on the securities exchange. What we mean is that a public company can invite the members of public to invest on those shares. Sawa. Kama wewe, you can buy the shares of that given company. Now, private company, we are talking about the unlisted company. Sawa. Those companies that cannot invite the members of public to invest on those shares, we call them the private company. So in our case, we'll just be doing it in general. What are the financial statements that are required to be maintained by those companies? Then number 8, We'll also talk about the accounting for assets and liabilities. How do we account the non-current assets? And also, how do we account the liabilities? Number 9. We'll also talk about the incomplete what? Incomplete records. Now, when I talk of incomplete records, it normally happens in the case of sole proprietorship or the sole trader, where you realize that the sole trader or the partners may lack what we call the accounting skills. So if they lack the accounting skills, what they will do, they will just maintain incomplete records. Information haitakuwa complete yenye watakuwa nayo. Sawa. And as a result here, we'll be able to know how you can help them to complete their information. Sawa. And then number 10, we'll also be able to talk about the correction of errors and frauds. Correction of errors and frauds. Collection of errors and frauds. So, now, when we talk about an error, this is a correction of errors and frauds. Nimesema frauds, Acha nianze na errors and frauds. Now, when we talk about an error, is an intentional mistake. Sawa. Yani ile mistake unafanya without intention. When we talk about a fraud, this is a deliberate act. Sawa. Basically, is an intentional mistake. Sawa. Our concern will just be on the errors. How do we correct the errors? You realize there are those errors that will be affecting the agreement of trial balance. Yani the trial balance will never balance because of this error. And there are those that do not affect the agreement of trial balance. We'll be able to see how can we be able to correct them. Sawa. Then number 11, we'll also talk of, and up to here, wenye mnafanya ATD, yenye itaishia hapo. Sawa. Yeah, where those that are doing ATD, tutafanya hadi that part, ATD 1. Now, from there, I will go, for those that are doing also this, the other unit, the CS, the CPA, and CFA. Topic number 11 itakuwa hii tunaita the non-profit making what? Non-profit making organization. Sawa. Now, the non-profit making organizations, they are those organizations that are there not to make profits, but to meet their members' objectives. And basically inamaanisha, we'll be able to know how the football clubs maintain their accounts, how the social clubs, the church, the mosque, Red Cross, how do they maintain their accounts? Do tunaita the non-profit making what? Organization. Then also we'll talk about the public sector. Public sector accounting. The public sector. Now, generally, this is on how we account for government entities, the ministries. Sawa. Are we together? We'll be able to know how we account for those public sector entities. Now, for those that are doing CS, the principles of accounting and taxation, the part of accounting itaishia hapo. Sawa. Ndio sasa tubakishe the other part of taxation. Yao itaishia hapo. Now, kuendelea on accounting, number 13 is now for those that are doing a FA in CPA and CFA and ATD2. They will also do what we call the financial statements of a manufacturing entity. financial statements of a manufacturing entity. Manufacturing entity. Now, manufacturing entity. Now, I want you to differentiate a company and a manufacturing entity. Company here, hii inanunua goods ikiuza. Kwa pamoja. When I talk about a manufacturing company or entity, they manufacture the goods and then sell them. Kwa pamoja. So here they incur two costs we call the conversion cost and also what we call the raw material cost. Sawa sawa. We'll be able to see how they prepare their accounts. Sawa. Then number 14, we'll also be able to talk about the statement of cash flows. The statement of cash flows. This is under what we call the IAS what? 7. Now, statement of cash flows here is a statement that shows the various sources of cash of an organization and how the cash is utilized in that organization. Hivi ndio namaanisha venye hiyo kampuni inapata pesa na venye wanatumia hiyo pesa. Sawa sawa. Generally, we categorize those activities into 3. Kuna ya relating to the operations, relating to the finance, and also the investment is what we'll be talking about here. Sawa sawa. And then number 15, we'll also be talking about what we call the ratio analysis. Ratio analysis. Sawa sawa. Now, ratio analysis, as I've said, ni tu tunatafuta SWOT. Strength, weakness, opportunity, as well as what? Threats. When we talk of strength and weakness, we are talking about the factors that affect the internal environment of a business. Sawa sawa. When I talk about opportunities as well as threats, we are talking about the factors that affect the external environment of a business. And basically, for us to know that, we do it through what we call the ratio analysis. Sawa. And then that will be the last part for those that are doing CPA and ATD2. The only topic I've said for those that are doing SCS will not be able to cover is on manufacturing entity, walitoa. It was there previously, they removed that, the cash flow, and these ratios. Sawa. Are we together? Now, for those that are doing CS, I will also have a small part of taxation that I will have to take you through. Because you remember your unit is the principles of accounting and taxation. The accounting part is up to this point here, public sector. And then we'll be able to get to the part of taxation where I will explain on what we call the introduction to taxation. For those that are doing CPA, you meet the unit in the intermediate, so you don't have to worry. Those that are doing ATD in ATD2, you do that part. Then we'll also talk about the investment allowances. And then we'll also be able to talk about the topic number 3, the excise duty and custom duty. Those are the other topics that we'll be able to talk about. These 2 are theories. The only computation will be on investment allowances. And that is how we'll be able to cover. So one of the things that I also want will be, as we begin, in financial accounting is all about the format. So the format will always be the same. The format never changes. Remember, as I was explaining in introduction to accounting, I've said we comply with the accounting standards. Sawa sawa. Na ndio maana unapata the financial statement of a given company are just the same as financial statement of the other what? Company. And that is for easier comparability. So we begin with the first topic then. Introduction to accounting. That is now where we now be able to understand the basis of accounting. Introduction to accounting. Introduction to accounting. Now you say accounting is the art of recording. Accounting is the art of recording, classifying, recording, classifying, summarizing, and analyzing financial transaction, and analyzing financial transactions, and analyzing financial transaction, and interpreting them, analyzing financial transaction, and interpreting them their own, interpreting them their own, and interpreting them their own. Now we can talk of the users of accounting information. This is one of the common questions, the users of accounting information. Now, who are the users of accounting information and what are the information need? So, why do they want from that accounting information? Tunaanza na wa kwanza, the investors. Investors, or we may call them the what? Shareholders. Now, what does the shareholders want? They require accounting information for them to determine the profit generated by the what? The business. And also for them to be able to determine the amount of dividend they are expecting to receive. And also to assess the value of their assets. So you write and say they require accounting information. They require accounting information. They require accounting information in order to determine accounting information in order to determine the amount, the profits generated by the entity, profit generated by the entity, comma, profit generated by the entity, comma, the amounts expected to be received as dividend, the amount expected to be received as dividend, amount expected to be received as dividends, amount expected to be received as dividends, and to determine the value of the assets, and to determine the value of the assets, determine the value of the assets. That is number one, the investors. The other one, number two, is what we call the lenders. In simple terms, I'm talking about the financial institutions. The financial institutions, we are talking about the banks. Why do they require accounting information? Come a bank. They want to know whether you have the ability to pay the loan. Generally, they are determining your credit what? worthiness. Ni sawa? And also they want to determine the value of the assets that you can use as a collateral, or as a security in obtaining the loan capital. Ni sawa? So you write and say they require accounting information to determine. They require accounting information to determine the credit worth. Determine the credit worth. The credit worth of the entity. And to determine the value of the asset. And to determine the value of the asset that can be used as a collateral in obtaining loan capital. Collateral can be used as a collateral in obtaining the loan capital. Used as a collateral in obtaining the loan capital. Number 3. Tuko hapa na government. Yes, sawa sawa. Now, why do government require the accounting information? They want to determine the amount of tax they are expecting to receive from the entity. Sawa sawa. Generally, what belongs to the CISA? So kwa pamoja, what belongs to the government? Kwa pamoja. And also they want to determine the level of economic growth. Sawa sawa. So you write and say they require accounting information. They require accounting information. They require accounting information in order to determine the amount expected to be received as taxes. Amount expected to be received as taxes. Amount expected to be received as taxes. And to determine the level of economic growth. To determine the level of economic growth. Number 4, we have the management. Say, they require accounting information. They require accounting information in order to determine. Accounting information in order to determine the profits generated. In order to determine the profits generated, and to help them in making day-to-day routine decisions of the business. In making day-to-day routine decisions of the business. Help them in making day-to-day routine decisions of the business. Day-to-day routine decisions of the business. Day-to-day routine decisions of the business. Number 5. So what we call the customers. Say they require accounting information. They require accounting information. They require accounting information in order to determine the reliability of the business. The reliability of the business for product and services. The reliability of the business for products and services. in order to determine the reliability of the business for products and services. The other one is also the employees. The employees. Now, why will the employees require the accounting information? Is to help them to negotiate for better terms of employment and also to determine the future of what? Employment. Inaweza kuwa inaisha. Company is going bankrupt and you don't know. Sawa sawa. That is why you require the what? Accounting information. So you say they require accounting information. They require accounting information. They require accounting information in order to negotiate for better terms of employment. In order to negotiate for better terms of employment. In order to negotiate for better terms of employment and to determine the future of the employment. And to determine the future of the employment. The last one is the general public. Yani mtu yeyote. Sawa sawa. The general public. Why will the general public require the accounting information? They want to know whether you are participating in what we call the what? Corporate social responsibility. Corporate social responsibility is mainly, I mean, giving back to the what? Community. Sawa sawa. Is the organization participating in community development programs? As the organization employed members of that particular community? That is what in this case they want to do. To know. Sawa sawa. So you write and say they require accounting information. They require accounting information. They require accounting information. Require accounting information in order to determine whether the company or whether the entity, in order to determine whether the entity is participating in community, is participating in social corporate responsibilities, participating in social corporate responsibilities, quantitative social corporate responsibilities. So we can now talk about the quantitative characteristics. Qualitative, not quantitative. Qualitative characteristics of a good accounting information. Now, these all the ones that the users have said is one of the common questions. I will share with you the past papers. You'll be able to see how frequently they have been asking such questions on the users, on the qualitative characteristics of a good word, accounting information. Now, number one is what we call relevance. Relevance. Now, accounting information should be relevant in that, you write that, accounting information should be relevant in that, should be relevant and should be provided on time, relevant in that, just use in that, should be relevant in that, it should be provided on time, in that it should be provided on time, should be provided on time, and should have the ability to influence the decision of the users, and should have the ability to influence the decisions of the users, should have the ability to influence the decisions of the users, the decisions of the users, the decisions of the users. So that is what we mean when we talk about the relevance, the ability, the reliability. Say a good accounting information must be reliable. A good accounting information must be reliable. Must be reliable. So. Now, generally, let's just talk about the qualities of a reliable information. Of a reliable information. What are the qualities of a reliable information? For information to be reliable, what is the quality that should be having? Number one, or Roman 1, there is what we call the faithful representation. Faithful representation. Faithful representation. Now, what do we mean here? We mean accounting information must faithfully represent transactions and events that took place during that what? Accounting period. So, yeah. So write and say accounting information must faithfully represent in it. So I've said accounting information must faithfully represent. Accounting information must faithfully represent. Must faithfully represent transactions and events. Transactions and events. Transactions and events that took place. Transactions and events that took place. Transactions and events that took place during the accounting period. During the accounting period. During the accounting period. Number two. Should be what we call the neutrality. 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 Say accounting information must be free from bias. So for it to be reliable, it must be free from what? Bias. Kipendeleo. Sawa. Now, why are we saying this? Now, this is what I want you to understand. In accounting, there are areas where we will be required to use assumptions or estimates. Sawa. Like, for example, there is no way you can be able to determine the actual differentiation of an item. Ama unaweza kuwa uwezi kuwa unajua, si ni ukweli? Generally, it will be based on an estimate. Kwa pamoja. And therefore, when you are making an estimate, you are required to be neutral. You're not supposed to allow what? Bias. Number three is what we call the prudence. Number three is what we call the prudence. Now, what does the prudence this here require? Now, in businesses, chani waambie kitu moja pia. Now, in businesses, if organizations want to attract investors, they will do one thing. They will overstate their assets. They will also overstate their incomes. And they will fail to disclose their liabilities kama loans, or they will fail to provide for their losses. Sawa sawa. So ni kumaanisha juu hizo vitu hazitakuwa zinaonekana, it means that that organization will be more attractive to the investor. Generally, in auditing, we call it the window dressing. Ni ile unapalisha dirisha nguo, lakini dirisha in this case will be now the company. Yaani unaivalisha nguo ikae smart, lakini si venye iko. Kwa pamoja. That is what in this case happened in the prudence. So prudence here inatuambia we're not supposed to do that. You're not supposed to overstate the assets or the incomes. And also you provide for all the liabilities and the losses. Sawa sawa. So you write and say this requires accounting information. This requires an entity. It requires an entity not to overstate, an entity not to overstate assets and income, but to disclose liabilities and provide for the losses. But to disclose liabilities and provide for the losses. Disclose liabilities and provide for the losses. And provide for the losses. Roman number 4. Umesikia venye nimesema hapo? Yeah? Kwa prudence. Yeah. You have to ensure if you is an organization uja to overstate your assets. Because basically zingine they based on assumptions. Kama saizi ukiuliza KTDA, the value of this building, they will do an assumption. Wakwambie ndo hiyo. Ndio. Out of that assumption, they may overstate the what? Value of that building. Pamoja. So it is in prudence is also one of the accounting principles or concept where it requires us not to overstate those assets and what? Liabilities. Sawa sawa. Now, substance over form is also another quality of a reliable information. Now, substance over form requires that transactions and events to be accounted for in accordance with the economic existence and not merely their legal form. Hiyo kizungu kidogo umeielewa? Now, this is what I mean. This is in the cases of hire purchase. Kama mtu akinunua nguo, sasa kama mtu ananunua gari, anunue on hire purchase. Si kuna kuanga na agreement. So sasa hii inatuambia we are not supposed to base on that agreement. We are supposed to base on what we call the economic existence. yaani venye economy ina change. So kama kuna inflation imeenda juu, definitely the interest rates itapanda, meaning that you will end up paying what? More than what you had agreed. That is what we call the substance overfall. Sawa sawa. So you write and say this requires transactions and events to be accounted for. Transactions and events to be accounted for. In accordance with the economic existence, and not merely their legal form. Economic existence and not merely their legal form. Economic existence and not merely their legal form. What I mean is in the cases of hire purchase, we don't base on the legal agreement. We base on how the economy in this case is changing. Sawa sawa. Now that is the qualities of a reliable information. Sasa turudi nyuma, tuendelee. Number 3. Another qualitative characteristics of a good accounting information is what we call the understandability. Understandability. So you write and say accounting information must be well understood by the users. Say accounting information must be well understood by the users. Accounting information must be well understood by the users. Sawa sawa. So the users of accounting information must well understand the information. Hawa wenye tumetaja hapa lazima waelewe ni nini unapeana, because accounting is an information. Pamoja. So they must understand that information. Pamoja. And then number 4, comparability. Say users of accounting information must or should be able. Users of accounting information should be able to easily compare. Financial statements of different entities. Compare financial statements of different entities. Financial statements of different entities. Last one is what we call in the timeliness. Say accounting information must be provided on time. 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 And that is the qualitative characteristics of a good accounting information. Now, let me also diversify this further. Now, I think it was a question in financial accounting, where ilikuwa inasema you talk about the quantitative characteristics and qualitative characteristics. Sawa sawa. Quantitative and qualitative. Sawa sawa. When we talk of quantitative, we are talking about those two. When we talk about the quantitative, we talk about these other ones. Sawa sawa. Yeah, so just in case wakuuliza hivyo, that is how you do that. This is for quantitative. Quantitative. These other ones are for qualitative. So the qualitative characteristics. Professional ethics. Professional ethics. Professional ethics. So you write and say these are principles, or these are the fundamental principles. These are fundamental principles that act as a guide to professionals, that act as a guide to professionals, that act as a guide to professionals in provision of professional services, to professionals in provision of professional services, to professionals in provision of professional services, in provision of professional services. They include number one, integrity. Include number one. Now, in other question, they will call them the fundamental principles. So, if they say the fundamental principles of an accountant, easy to. So, number one is the integrity. Saying professional accountants are required. Professional accountants are required to be honest and straightforward. To be honest and straightforward. To be honest and straightforward. In provision of professional services. Be honest and straightforward. In provision of professional services. In provision of professional services. Number two is objectivity. Objectivity. But two is objectivity. Say professional accountants are required. Professional accountants are required. Professional accountants are required not to allow bias. Not to allow bias or undue influence of others. Not to allow bias or undue influence of others. Not to allow bias or undue influence of others to override their professional judgments. Not to allow bias or undue influence of others to override their professional judgments. To override their professional judgments. Professional judgments. Sawa. The other one is confidentiality. 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 Same. Professional accountants are required. Professional accountants are required not to disclose information about the entity. Not to disclose the information about the entity. Information about the entity without their permission. Information about the entity without their permission. Not to disclose information about the entity without their what? Permission. Now, however, there are situations under which you can go against this principle. Sawa sawa. Kuna ile unaweza disclose the information of the company without their permission. Number one, ni kama when the information is required by regulatory bodies. Kama KRA, the Capital Market Authority, the Insurance Regulatory Authority, all those organizations, if they require information, you can disclose it without their permission. Sawa sawa. Number two is when giving evidence in court. Sawa sawa. Kama unapeana, you are acting as a witness. Na unapeana information, you are supposed to give the information, you have to disclose them. Sawa sawa. Number three is also when you are defending yourself in case of illegal accusation by the entity. Sasa kama wewe utaona ndio usaidike, you have to disclose that information. You can do so. Ni sawa. Again also is when you suspect or you know the entity is dealing with matters that are prejudicial to the public interest. What I mean is you are aware that they are dealing with what we call the money laundering. Ama they are doing what we call the terrorism financing. Because in that case, under criminal law, you may be criminally liable for not disclosing that information. So that is also when you can also be able to do what? Disclose. Number four, professional competence and due care. Competence and due care. Professional competence and due care. Now, when we talk of professional competence and due care, this requires professional accountants to exercise their knowledge and what? Skills in provision of their professional services. So you write and say this requires professional accountants. This requires professional accountants to exercise their knowledge and skills. To exercise their knowledge and skills. To exercise their knowledge and skills in provision of professional services. In provision of professional services. The last one, we call it the provisional what? Behavior. Provisional behavior. Provisional behavior. Now, when we talk about provisional behavior, it requires professional accountants to behave in a manner that may not make any reasonable or informed third party to compromise your professional services. So you write and say this requires a professional accountant to behave in a manner requires a provisional accountant to behave in a manner that may not make any reasonable or informed third party compromise their provisional services. Any informed third party compromise their provisional services. Sawa. And that is a provisional ethics. Sawa. Now, in my next class, we'll talk about the accounting standards. Sawa. And then it will introduce us to now the accounting what? Principles or concepts. So make sure that you don't miss. You miss on the accounting principles and concepts, sasa hizo zingine za huko mbele zitakuwa zinakutatiza. Ni sawa? Are we together? I'm hoping you are understanding. Ndio maana tunaenda pole. Sawa? Yes. So we just continue from there from our next class. Unless there is anyone who is having a question, we can end at that point. Kunaye ako na swali na amobi mmeelewa. Any question? Or any concern? Question or any concern? Unayo? Si basi inakaa hii class umeelewa. Situmalizie hapo. And you have a good night.